Okay boys, I'm going to go over the only swing strategy you need to quit your 9 to 5 job. This is exactly what I used for my 9 to 5 job as I was working on building sites. So I had to swing trade. You can't day trade. Well, I couldn't personally day trade. I was on building sites, I had to be on site 8 o'clock in the morning. Obviously London Open is a no-brainer. You can't really trade it. I had to swing trade. And you don't want to swing trade because you want to get out your 9 to 5 as quick as possible. But this was the only and quickest way I could actually get out of my 9 to 5. And it's such a simple strategy. 1 hour, 4 hour daily is all you need. And you look for the same pattern over and over and over and over and over again. Simple as that. What we're looking for, as I'm drawing it, you will probably see I'm on the charts already. So if we're in an uptrend, what you want to look for is something like this. Something like that. Literally, that is the pattern you want. That's the pattern you want to see. That is that pattern. And if we're in a downtrend, you want to see something like this, which is exactly the same. That's what you want to see. Yeah? Simple. So they're the patterns you want to see. And straight away you can see it. And then obviously, once again, Fibonacci. You want the Fibonacci. Grab your Fibonacci tool, open it up. And this is what we want. We want a 0, a 1, a 5. The 5 doesn't matter too much. And a 0.665. And the reason why it's a 0.665 is not nothing special. It's not no crazy magical number. All it does is when we put our sell or long position in place with our stops at the highs and our take profits at that low, it gives us a 1 to 2. That's all it is. It gives us a 1 to 2. All we're looking for is a 1 to 2 to get in, get out of the market, done. That's all it is. It's not no special fancy number. And straight away you can see, look, AUD, USD, we're in an uptrend. And what do we see? So if we're in this uptrend here, starting from here, here's a low, up, down, push, down. This is the model we see. Yeah, exactly what I was expressing and explaining. It's not as clean and as the same, so it's not exactly the same as what I drew, but here's our formation. Yeah, there's a ziggy, and nothing is confirmed until this low gets broken. Simple as. And what high breaks that low? This high to this low. That's where we draw our Fibonacci. Soon as this breaker structure happens, that's a confirmation of us that the tide is changing. We draw our Fibonacci out, plot it on, set our orders, because we're not, remember, we're on building sites, we're in the office, we're doing our day job, and that's all we do. We set our orders. So once this is broke and closed, we need a close confirmation. We just draw a Fibonacci out. We've got all the time in the world, because this is the 1 hour, so you've got 1, 2, 3, 4, 5 hours until the entry even forms. You set your order, place your stop loss at that high, you take profit at that low, and then you leave it to ride. That's all you do. And then you wait again for the next setup. And then again, I see another one straight away, right here. So we're getting this upward move, down, up, down, break structure here. What are we waiting for? This one's a bit more messy, but once again we draw a high to low. What broke this low? What was the high that broke this low? This range here. This high to this low. Then we start confirmation of the pullback. Great. We set our orders at the Fibonacci. It takes a little while to get there. Stops at the highs, take profits at the lows, take profit here. Another 2 are complete. Nothing happens again for a while, right? In this case scenario, you're going to be waiting about, but this is when your list comes into play. So when it comes to swing trading, these are all the pairs I would swing. I would literally swing all the major and minor pairs. So every day, I would just go through them, see which one is giving me the best opportunity. Like here, for example, this is live. Here, for example, this would be our trade. Sweep of the highs has happened. Just drawing, make sure the drawing tools happen. So low, high, broke this high. So this is our new range from here to here. we create a low, we actually break. You can see the line there. That wick got broken by that candle. It's a very minor break, but this is the high and this is the low now, because this low created this new high. Then we push down and we break. So what are we waiting for? Well, it's already played out. So we draw our Fibonacci and we would be currently in this trade now. So we would have spiked all the way up. We would have been in drawdown for a while, but we are at the moment in play for this trade. And whether it's a W or a loss, it doesn't matter, because we've already made 4% here. So if we take a 1% loss, we're still up 3%, right? But that is it. That is literally it. And then all day, no, not all day, every morning before I go to work, or the night before, or whatever, depending on what time you're trading, time frame you're looking at as well. If you're looking at a daily, then you can do it days in advance. If you're doing it on the 4 hour, sometimes you could do it a day in advance or on the morning. If you're doing it on the hourly, you have to check the charts a bit more often, but you get the point. If you've got the time, you can do it. Here's another one straight away. I pulled down. What do you see? The market looks shit. Let's be honest. The market doesn't look good. It's all over the place. It's everywhere. But what pattern do we see? And we see it right here. Here's a low. Here's a high. Here's a low. It broke that low. Remember, the candle has to close to make sure it's a new low. So we've got a high and a low. Then we impulse up, breaking this high. And then what happens? We flip. Simple flip. We literally tap into that area. Stops at the low, take profit at the high. We don't overextend that take profit, because we don't want to get greedy, because we're not too concerned about higher time frame structure or what bearish or bullish trend we're in. All we're doing is looking for the same pattern over and over and over again. Because if you was, this is actually a perfect example, if you was to look at these, then this would have swept you out. Possibly. Maybe not. But it would have been very fucking close. And that happens a lot, so you've got to be very careful. So just target the 2R, get in and get out. And this trade we've actually played out really fast. 1 hour, tagged in, within 2 hours you would have hit take profit. So very quick trade. Once again, same thing happened again. Let's remove this. Straight away, straight after. High, low. This is the low, remember, because this low created that high. Yeah, this low created that high. So this is our new range. That's our new range. We push down, we don't close, but we push down and then we do close. We close below this level and this level. So we broke 2 levels, swept those 2 levels out. So the liquidity is gone from those 2 levels, and then we impulse move up. What created this low? Oh, what created this low here? This high. This high created that low. Simple as. When you're looking at the market, and we're looking for this move, we just need to look at what high created that low. That high there created that low. Then we push up, impulse up, we break that high, and what do we do again? Draw a Fibonacci. Draw a Fibonacci. And that is that. And actually, that one didn't actually take us in, but that would have been, once again, obviously you're not going to get in off this grey candle because the high hasn't been created yet, but you would have set your order here. That's big. And then you would have done that for your 2R, but obviously we didn't get tagged in. But that's one of them ones that you miss. That's fine. Moving on, let's see if we can find another one. Just have a quick scan. See one right here, perfect. Again, low created this. High created this low. This is the structure that got broken because we're pushing down, up, down, broke that structure. Then we impulsed to the upside, breaking that structure. What do? We draw a Fibonacci. And as you can see, we hit take profit for a lovely 2R. Perfect. Simple. Once again, let's look for another one. Another one. Once again, they pop out all the time. I don't even trade this anymore, but it's making me want to trade it. Right here, you see it. Low, high, obviously opening gap, high. We break, sweep at that high, we push down. Where's our latest range? It's from here to here. Push up, tag in, bosh, bish, bash, and bosh. Then you get in that trade, you win that trade, and then that move literally happens straight away. You see it, the sweep, the expansion to the upside, the reverse to the upside. Let's see if we find another one here. This is a bit more of an extreme example, this whole area here, because obviously we've got a high here, we've got a high here. We push up, we sweep out both of those highs, and then we push down extensively. This is actually incorporating momentum as well. So the structure is downside. I know I said you don't have to worry about it, but this is a reason. This is an example on how you can implement it. With downside, we sweep out this high, sweep out this high, then we impulse downside, breaking all this structure level. What's the high that created that low? This one to this one. Draw your Fibonacci. Does it tap? And it does. Tags you in. Bosh, bosh, and bosh. So another 2 are there. That's a shame that that sweep didn't happen, but I wonder if that actually taps it. That would have tapped it. But the sweep didn't happen. But if you're brave enough, once again, you do realise if you incorporate whether we're bullish or bearish, you can see that we are bullish here, and then we do break structure, which structure would have been this one, because this one created this high, but then this high never got broken. So then we do impulse to the downside, breaking that structure, Fibonacci from here to here. We pull up, return, bosh, entry, off of here, down to there for a perfect 2R. Let's see if there's any more. And as you can see, here is a clear example on NZD USD. I say clear, it's not as clear. So you get sweep, push down, break structure. Where do we enter? What high created this low? Obviously this high here, down to the low. Remember, it's more swing structure, so we're looking for swings. We need the clear swings. Come up, tag in, and then reverse to the downside. Another clean and clear system there. And then straight away, once again, look, didn't even see that, but this happens again. And then we push down, create a high, create a low, swing, then a push to the upside and a return. Liquidity gets swept, break structure here to the upside, and then we return and we get another clean entry back up. And all this is just pure set and forget, because once you get that pullback, this candle closure here, you know this is your new high. You set your order, set your stop loss obviously, set your take profit, and then you're on your way. You can just get on with your day, get on with your job. And here, for example, you're making trades very quickly, very quickly. That is a liquidity. You get a liquidity sweep there. There's no candle closure, but you do get a wick sweep, and you are in a bearish momentum now, so that one would count. So you get the sweep here, the push down, the return here is another one there. So that's very clean as well. And obviously you can see we tag in, we enter, stops at the highs, take profit at the lows. You get the point, and it plays out perfectly. One here. Sweep of these lows here, low, we push up, return, and then we go to the upside. So once again, that one actually was a mistrade. That's a mistrade, but it doesn't matter. And that is literally it, guys. It's a very simple model. It works on all time frames. It even works on the 5 minute, 15 minute, and all that. But the lower time frames is going to be less significant. It's not going to play out as much on the lower time frame. So the higher the time frame, the stronger the move is. You can do it on the weekly and monthly. That's if you really want to hold long term. But the daily also works very well very well. And sometimes going to the higher time frame also helps you identify the trades, as well as helps you identify on the lower time frame, which is good. Here obviously doesn't help, or there, so they're both really bad examples, but it does help sometimes. But yeah, that is literally it, guys. That is literally it. So what you are looking for a move to the upside, then a push up, liquidity sweep, candle close or wick. Now we can just use wicks if you want, as long as it's an impulsive move to break that structure after. Then we enter off that Fibonacci, and then we target just the lows there, because we don't want to extend too much. We just want to target a fib, get our fib entry, get in, get out. That's actually perfect. And then that's our trade. And it is literally as simple as that. And that is what got me out of my 9-to-5 job. Literally, that system. And I don't trade it anymore because obviously now I can day trade. I've got more free time to do that. But that is the system that got me out of my 9-to-5 job, guys. E8 markets, I have a discount code, CMCAP. Use it. You get a nice discount. Any discount that is currently running on E8 markets, the CMCAP will give you the maximum discount possible as well, which is really fucking good. So you get that. Also, Discord, Academy, all that is linked in the bio of my account and probably in the information below. If you want to join the Academy where I teach you how to day trade, then you're more than welcome to join. And the same as a Discord, that's a monthly fee, whatever, join it, website's down there, all that good stuff. Happy days. I will catch you guys in the next one. Peace out.